Union Bank has witnessed an improvement in its asset quality in the September quarter and also reported a profit of 139 crores. Nikki Mirchandani caught up with the MD and CEO Rajkiran Rai to get a fine print of the earnings for the quarter gone by. She started by asking about the bank's growth. Let's listen in to what he had to say.
On the net interest income side, we have already grown about 7.5, and we expect that this will be very steady because it is in the background of about 240 crores of reversal which happened in this quarter, also interest reversal. So we are able to maintain this growth rate, and it can be further improved.
Sure. The key positive this time around in the results was the moderation that we've seen in slippages to around 3% of the past year loans. But sir, given the unrecognized stressed still situation remains high, do you think there is a possibility of the slippages exceeding the guidance of 3.5% for FY19?
At this point of time, in the given circumstances, we don't foresee exceeding this guidance. So it should be within 3.5 for this year.
All right, so a very important question that I'd like to understand is the exposure to IL&FS and also to some of the sensitive sectors like NBFCs and builder finance.
Yeah, actually in IL&FS, actually we have major exposure to one SPV which is in thermal power, but for that our exposure is very, very small for their holding companies and other companies. So, and these accounts are all performing as on today, and we have no issue with IL&FS. Our total exposure to IL&FS as a group is around 1,100, out of which about 80% is to one thermal power project. So we don't foresee much problem there. On the NBFC side also, we don't foresee any problem. Our total exposure to the NBFC as a whole is about 35,000 crores, but then we don't foresee any problem as of now in the NBFC sector.
All right, then I'll graduate to the net interest margins for the quarter. The bank reported NIMs to around 2.2%. I'd like to understand what is the margin outlook for the second half of this financial year.
If you look at the full half year, the NIM is around 2.22, and our guidance for the full year is 2.25. So I hope that the next half year the margins will improve substantially because we are able to price our loans better now. So it can end with the upward bias over 2.25.
All right, so also I'd like to understand if the bank has any plans to raise any sort of equity, given that the CET1 remains to be relatively weak for the bank.
Yeah, I agree because we need to reach 8% levels by March as per the Basel III requirements, for which we need about 1,500 to 1,600 crores of equity even at the present risk-weighted asset levels. So board has approved capital raising plans for the full year, which is at 7,000 crores, but then we need to really moderate growth and capital requirements because we don't want to dilute much equity at this price levels. So we will as the things fold out in the next half year, we will see, and definitely yes, we need capital before March, and most of it is likely to come from the government. So, but then definitely we will try to moderate between increasing the capital and the growth because looking at the market scenario.
All right, the last question that I have for you is the bank has put up for sale stakes in 6 of the companies, which include NSE, NSTL, and the e-governance, SIDME, Clearing Corp, and J Financial ARC. How much are you looking to raise from these, and by when can we expect the money to come into your books by?
The process is almost complete. So I think the bids are being opened now. So we are planning to raise about 250 crores in this quarter by sale of this stake.